In this video, I'm sharing my simple 3-step process for trading liquidity sweep reversals in the market, and these are especially helpful when you don't have a change of character nearby. It's one of those patterns where once you see it, you can't unsee it, and that's a good thing. So if we haven't met yet, my name is Justin Bennett, forex trader since 2007, full-time trader since 2011, and as always, all of this is my opinion only and not financial advice. So let's get into this here, and as I said, this is my favorite way to play reversals in the market, especially when you don't have a change of character nearby. So before we get into how to trade this setup, I do want to point out that this right here, okay, looking at this on the Euro 1 hour time frame, this is not technically a change of character. So I've mentioned this before in other videos, but you need to have a close below this low over here. Okay, so in other words, if we take a look at this here, let me snap this right here to the low, so that we're dealing with the exact low here in this case. So in order for this to right here to be a change of character, which is a reversal pattern in the market, and again, I've made videos on this before, so if you missed those videos, check them out in the description of this video. But this right here, off of this low, what you would have to see is a close below here. So you'd have to get a candle closing below this in order to make this a valid break of structure to the downside, and then this up here becomes a potential external low that you can play a change of character off of. Now, that of course depends on the structure of this as well, but in this case here, you can see where we did not get a close below this low right here. And so therefore, you really have to go back to this portion of the move in order to find anything that could be potentially considered an external high. And even in this case, I would say that all of this here for the euro is internal, okay? Because we didn't get the market coming down and making a low, coming back up, making an internal high, and then sweeping that internal high before breaking to the downside. So in this case here, it was a little bit tricky if you weren't using this setup that I'm going to show you today in order to identify that this trend was reversing, and it did reverse. Okay, so in other words, if you weren't looking at this here, this pattern, then it would be kind of difficult to know that the market was about to reverse. Okay, because again, we don't have an obvious change of character anywhere nearby. So let's talk about this very simple 3-step pattern here. And again, this is the kind of pattern where once you see it, once you learn it, you will not be able to unsee it, and you will see this all over the place, 1 hour time frame, 15-minute, etc. Okay, so this pattern starts with step 1 being a low. Okay, very simple. We either have a lower high in the market, and within a trend like this, this does start, okay, best when you have an established trend like this where the market is moving lower over a given period of time. In this case, it was several weeks. We were moving to the downside. So you have an established low like this. We're going to call this established low, okay, within a downtrend. So established low in downtrend. Now, this of course could also be an established high within an uptrend, which we'll talk about a little bit later. But in this case here, we have the established low. And the low we're referring to is this one right here. Now, the reason this is important is because you get buyers actually buying down here on this low. Okay, and the same thing even through here, and the stop losses are going below here. So you get buyers coming in here, buying this low, setting their stop losses right below this low. And then step 2, as you can imagine, this over here is the liquidity sweep, also called a liquidity grab. So this right here is our sweep of the first low. Okay, and let's label this step number 2, just to keep it nice and clean. Okay, so step number 2 is to wait for that liquidity sweep below this low over here. Now let's talk about what's happening here, just so that we're all on the same page. Okay, so this over here, again, you have buyers stepping in here, you have stop losses going below this low, and then over here on step 2, you have the market actually wicking below here. Now, if we had closed below this, okay, that would change things a little bit. You can still have a liquidity sweep on a close below, but ideally, in my experience, for this liquidity sweep reversal pattern to play out, it's always best to see the market just wick below here. And I use the 1 hour time frame for directional bias. I found that it's a great blend between conviction level, so high conviction because it's not a super low time frame, but at the same time I get enough setups throughout the month. So it's a great blend between the two. Because the problem is if you're looking at a 5-minute or 15-minute for directional bias, you are going to get a lot of noise in there, but the 1 hour time frame helps to filter out a lot of that noise. So here on the 1 hour time frame, again, we had the low develop, we had buyers buying down here, setting their stops below the low, we had the liquidity sweep. Now, this right here is where buyers are potentially buying, large buyers are potentially buying, and that's what's key. But the key word there too is potentially. We don't know that yet, because this could just be a case where the market goes sideways here, we wick below, okay, and then you think that this is a liquidity grab and that large buyers are buying, and then we just consolidate and continue lower. So the confirmation here, and this is really important, is step 3. Okay, so far we have an unconfirmed pattern. We have an unconfirmed liquidity sweep. Now, the third step, okay, is going to come up here in the form of displacement. Okay, so in this case we have, and I'm just going to call this displacement because really, in this case, it would be bullish displacement above the high. But of course, in the case of a topping pattern, which again, we'll talk about later, it could be displacement to the downside. Okay, that's what you want to see. So in this case here, the displacement I'm referring to is this strong push out of this area. Okay, it doesn't necessarily have to be, although you do want to see the candle here closing well above here and really giving you that conviction. But the move I'm referring to mostly here is this strong move out of this range. Okay, so you want to see the sweep down here, and then pretty much immediately, it doesn't have to occur right away, but pretty much immediately you want to see the market make this strong push out of here. And what this is telling you is that if you had suspicions that large buyers were buying this on this liquidity sweep of the low in step 1, if you had those suspicions, this right here is confirming it. Okay, this strong push out of here is confirming that buyers are now in control. Now, in terms of an entry here on this, okay, in order to turn this into an actual setup and an actual strategy, because right now this is kind of more just theory. If you were looking to buy this, right, the question becomes, do you wait for the market to come down here and tag potentially some imbalances or not? And in my experience, if you are going to get a move down here, and this is simply because if you think about it like this, you have the market trending lower for quite a long time. Okay, so you have this trend back here, the market making lower highs and lower lows. Then you have this low developing, you have buyers setting their stops below here, you have the market wicking below here, and we know now that large buyers have bought this. We know that because of step 3, right? We had the displacement, we had the close above this high back here. Okay, so we know now that large buyers are stepping in. So you have to think about it like this. If large buyers are stepping in down here at the lows, then what are the chances that the market is going to come all the way back here toward this area before reversing? Okay, now it can, but in my experience, a lot of times what you'll see is that you'll get maybe a small retrace, back here into this area, back here toward these highs, and then that's pretty much it. Okay, so you're not going to typically get a large move back here into the area because, again, if large buyers are stepping in after weeks of a downtrend, you have to think that they're not going to allow the market to come all the way back down here toward the lows, at least not in most cases. Okay, any kind of selling pressure up here to drive the market lower is going to be absorbed by those new buyers who are stepping in after weeks of a downtrend. Okay, so before we take a look at another example too, I do want to point out that the key for this, okay, when you get this displacement, the trigger for this setup here, for this reversal pattern is going to be this high right here. Now, in this case, this high is pretty close to these back here. But in cases where this might be here and then this high is up here, you want to see the close above, okay, the wick or the high in this case that triggered the liquidity sweep or liquidity grab. Okay, so you want to see from the high back here, once you see this liquidity sweep, you track this back to the last high. It's this one back here. This is the one that triggered this move lower. Okay, so for me, this is what buyers have to take out to really convince me that they have regained control. And then of course, like I said, that was really the bottom for the euro for weeks. And this was just a huge rally here from the lows up here toward the highs. You can see that from, let's say, from this close above, you can see up here to the highs, that was about 150 pips. Okay, so let's move over here now and take a look at another example. Very similar, but repetition is key. And I want to show you this look here as well to just kind of really drive this home. Okay, so you can clearly see here that this is our step 1. Okay, so we're just going to label this as step 1 here now that we know exactly what's happening here. And we can see that this over here is step 2. Notice we did not close below here. Okay, so this is step 2. And then we have step 3 being the displacement above here. Okay, so closing above the high that triggered the liquidity sweep. Okay, so this liquidity sweep down here was triggered by this high right here, not this one over here. It was triggered by this high. Okay, so this is the one that I need to see buyers take out, which we did right here. And again, you can see where the liquidity sweep happened over here, and it actually took some time for the market to break out. But on the actual push above this high over here, you can see the displacement that occurred. Okay, now remember what I said about the pullbacks though, being typically pretty shallow, and you can see that that was the case here. Okay, so the market went into an uptrend, and you can see that the only retrace that we got really was back here into the low. And I also want to point out too, what you'll notice here is that we had something very similar. Okay, so this right here, again, notice how the market wicked right below here, okay? So that right there was also indication that the market was now in an uptrend and pushing higher, which you could have done here off the high up here as well and called this, another liquidity sweep before the push higher. Okay, so you'll often see this, but this video specifically is about liquidity sweep reversals, just because this is my favorite way to play reversals in the market when you don't, again, get a confirmed change of character. Okay, but really clean pattern here. Once again, step one being that low, we had stops building below the low. We had the market come down here, wick below here and not close below. So the market was actually grabbing the liquidity from step one. Large buyers were potentially buying, but again, we don't have that confirmation until the displacement above this high. Okay, now let's take a look here at the pound, and I'm going to show you an example, an extreme example of a bearish reversal. So again, you can see the market came up here into this high, and this is what I mean too by repetition is key, because the market's going to give you all kinds of looks. It's not always going to be just a 10 or 15 pip move. Sometimes it could even just be 1 or 2 pips, and that can suffice. But in this case here, you can see the move above this high right back here. If we measure this out, this was about 57 pips, okay? So a really big move above the high over here, but this still qualifies as a liquidity sweep because we did not close above here. Okay, so in this case, what you have is, again, we have the market trending higher. Okay, so you can see this was a long uptrend here, all of basically an entire month here with the pound moving higher highs and higher lows into this point here. Now you can see that off of this high, okay, so this high right here, and the tricky part is that if you're trying to find an external low within this, okay, in order to mark out a change of character, the issue is that really since this point back here, all of this was really internal. There was nothing here external. The really, in my opinion, the external low here, if you want to draw one out, like if you come back here and you just take a look at this high and you call this your BOS, which it was, okay, this is a perfect break of structure and showing you also internal versus external, right? I mean, technically before this right here, all of this is internal, but what you can see here is that the market built internal liquidity on this first sweep here, and then we took it out, okay? So this is perfect because you had internal to external low, then you had a BOS up here. So the challenge with trying to trade this reversal over here, and all this matters for what we're talking about, because the challenge with trying to trade this reversal is that really, in order to call this a change of character from the pound, you would have to see a close below this protected low way down here, which we finally got. But notice the difference here. Okay, we're talking about a reversal that occurred up here in this area versus one that occurred way down here. Okay, and let's even see, because I'm not even sure if this ended up continuing lower, and it did, a little bit here, right? So this change of character would still have played out, okay, because you had this imbalance from the candle here, okay, on this hourly candle, right? Imbalance here, you had the close below giving you that change of character off of that protected low, and then the move into that imbalance, and then the continuation, okay? So that also would have played out. But again, we are catching these reversals much earlier in the process. Okay, so with that out of the way, guys, let's talk about this here and label this out. So this is our step one. So in this case, because it's a bearish reversal, we have the market coming up here making this high, and you have stops building above this high. Okay, now in this case here, we have step two being the liquidity sweep, also called a liquidity grab. And this is where again, large sellers in this case are potentially selling. Now, we don't know that yet, though, because we need the confirmation with the market closing below the low. Now, the low that triggered this wick up here, okay, is this one right here. So as soon as we get the close below here, we know that this is now a confirmed reversal. Okay, now in this case, we did get a little bit more of a retracement into this wick here on the hourly. However, notice though, if you take this high up here, right, from this high down here to the low that broke, we're not seeing the market come up here into this wick, right? It's still relatively shallow in terms of the retracement you get into this area following the confirmed liquidity sweep reversal. Okay, so that's important to note there. But in this case, again, this allowed us to get into this trade a lot earlier than if we were waiting for the change of character, which, as I mentioned, was all the way down here in this area. So the difference here between getting in here on this close below versus down here on this change of character, I mean, even if you were waiting for the retrace into this area, which you should, this was a 100 pip difference. So 100 pip difference in catching the reversal up here versus waiting for that change of character. Okay, so this over here is going to be step three. Okay, so again, we have the close below the wick, or the low in this case here, that triggered this liquidity sweep. Okay, so it's this low right here. We close below it right here. This is now a confirmed bearish reversal. Okay, so let's head back to the euro and we'll talk about one more example and then we will wrap up. So going back here to the euro, let's move out here again, still in the hourly time frame, just because again, this is the hourly time. This is the time frame I prefer when looking for directional bias and liquidity sweeps, things like that. Now you can also drop to a 15-minute time frame. I do like the 15-minute for those more intraday setups, but the hourly is really what I prefer for directional bias. Now looking here at this move, let's first put this into context. Okay, so this was actually within an uptrend. So unlike the cases we looked at before, where these actually occurred on reversals like this here, right, where the euro was actually bottoming out, in this case here, you actually have, it's a similar situation in the sense that the market is bottoming out. So in the low time frames, this was a downtrend and we had the market bottoming out. However, this is also more in the context of an uptrend here. So the market is trending higher with higher highs and higher lows, but we do have that lower time frame downtrend in place. So in this case too, and this is what I want to note, that this can be either like we saw on the pound, which was 57 pips above the high, okay, that liquidity grab, or in this case here with the euro, you can see this wick right below here. If I move all the way in and we measure this out from this low back here down here to the low, this was about 1.5 pips. So very, very shallow. Okay, but this still qualifies. And this would have also qualified because again, you can see where the euro was, moving higher highs and higher lows within this uptrend. And we also had here, if you look at this low down here, and I made a video on OTE before as well, but if you're developing an area of interest, you would have also known that this was the area you were looking to buy because from external low down here, okay, so external low here, external high here, following the BOS above here, this dark green box was OTE, okay, optimal trade entry. So this is how you develop an area of interest. Furthermore, we had a fair value gap down here in this region as well. So a lot going on here to tell you that this was a great area to start looking for buys on the euro. And you can see right here on the 1 hour, we did get a liquidity sweep reversal within this uptrend, okay? So reversal in the sense that we're reversing out of that low time frame downtrend, but we do have that hourly bullish trend, okay? Now looking here again, we have the market giving us this 1.5 pip below this low over here, but this still qualifies. Now we don't have confirmation of this until this high up here, okay? So once you get the displacement above here, which we certainly got, so notice the move out of this area down here too. Now we didn't break it on this leg, but notice the displacement, right, that occurs through here. And then you get it again on the breakout. And this is exactly what you want to see. You want to see those large buyers stepping in, okay? So this also technically qualified, even though it was 1.5 pips. So you consider the difference between less than 2 pips here or 57 pips on the pound. And this is what I mean by, these can come in all shapes and sizes, and that the market is going to give you all kinds of different looks, okay? But they're all valid liquidity sweep reversal patterns. And in this case, this was a huge move here from the euro out of this, okay? So the confirmation here, let's run through this here and label this out. So the confirmation here was 1, this low down here, we had liquidity building below this low. And number 2, this was very slight, but it still qualifies. This is the liquidity sweep below the low, and we don't have confirmation of this until we get the close above. Now, in this case, you can also see where this close above would have actually allowed you to get in before this huge move, okay? So before buyers really stepped in here and drove the euro higher, you would have had this close right here. And I also want to talk about this because even though this was very slight, so you look from this high back here, okay, up here to the close on the hourly, this was just a couple of pips. But here's what's key, okay? Here's what's key is that it's not just about this candle. It's not just about this 2 pip close above. It's about the displacement that you saw back here. It's about the displacement that you saw back here. Furthermore, notice this too. We had the market actually carving a higher low, okay, out of this range. So higher low here on that 2 pip close above, okay? So a 2 pip close above a high like this can also confirm a reversal. You don't have to get a monster candle out of here. All you want to see is displacement out of here, which we certainly did. Okay, so this is exactly what you want to see. But the most important thing here is that the market's going to throw you all kinds of different looks. And it doesn't matter if it's a couple pips of a wick or 50 pips or 100 pips of a wick, they all count. But the key here though is, again, you want to see that first higher low develop. You want to see the wick above or below that area. And then you want to see that confirmation, that displacement above or below the area to confirm that you have a true reversal pattern in place. So I hope this video has helped. If it has, be sure to subscribe to the channel and also check out this video right here where I talk about premium and discount and also that OTE, which is going to be a complete game changer for you. So I will talk to you again soon. Until then, trade well.